Hello everyone and welcome to today's crypto and stocks TA charts video. Today is September 2nd, 2024, Monday, just after 7 o'clock p.m. Eastern Standard Time. Today is a holiday in the USA. I am No FOMO Charts. I'm on YouTube, X, and TradingView. This is a swing trading and investing charts channel and YouTube video. Welcome everybody. Let's get started with the crypto TA charts. Starting with total crypto market cap on the daily chart, we are in this downtrending consolidation channel for basically most of this year. We did manage to hold above 1.8 trillion support and also 1.9 trillion support. This could turn into a potential upside down head and shoulders. This is not a textbook pattern. The neckline is very, very diagonal. So I'm just going to call this as support bounce for now, 1.9 trillion. If we hold this good, we can target in the short term the 2.0 trillion level or 2.2 trillion, 2.4 trillion on the way up. However, if we happen to reject down in the short term, that could turn into a short-term head and shoulders, which could reject us back down to about 1.87 or 1.75 trillion. Now, in the weekly chart, we're still in the weekly uptrend. Now it's getting interesting. It's getting interesting because we this year rejected down from 2.75 trillion resistance. That's a big resistance, 3 years long horizontal blue line resistance. However, it's starting to look like on a monthly chart and a weekly chart as well, there is potential for an ascending triangle play here long term. That's assuming this support level of 1.5 trillion in the arrow holds. So even if we pull back all the way down to 1.5 trillion, that support level needs to hold for the next 2 years, I would say. Now, if this bullish triangle and the ascending triangle does not hold on investing timeframes, monthly and weekly, then it could turn into a double top long term for the next, I would say, 2 to 3 years. So this is why, as an investor, I'm being cautious right now because it's not really at a perfect support level. It's bounced off of intraday support. So last week I was saying the total crypto market cap could turn into a cup and handle and needs to retrace a little more and then bounce off. That would be two price patterns that would execute. Cup and handle pattern, bullish, if it does this last part, has to retrace and break above the previous high to keep going up. Or it could just be ascending triangle, higher high, higher low plays like this. So support for the next, I would say, 1 year is very, very critical. 1.5 to 1.8 trillion needs to definitely hold, and then we need to see some rally. If we don't, there's going to be some selling in the market. Bitcoin is very similar. Bitcoin on the daily, we're holding above the support levels of 56,500 and the resistance above is 62. So I'm just going to play this rectangle, horizontal right now. We are still in the diagonal channel, very similar to total in terms of the consolidation pattern on the daily. The weekly chart, again, we're getting stuck at this resistance point from 65,000 to 75,000. Basically, we have not closed higher than that. The support level trend line on the downside, gratefully, thankfully, is holding. So there is, again, on Bitcoin, you can kind of see it. There is a potential ascending type of triangle. It's not perfect. It's more of a rising wedge actually on Bitcoin. It's not perfect. The top line has to be perfectly horizontal. It's not happening. But as long as we hold support above 50,000 to 55,000 in this blue circle in the arrow, there is a chance that if we hold that as support, we could bounce and rally later because of the higher high, higher low uptrend setup. What's going to reverse that in my mind is if we keep consolidating and then we have a lower close that's very significant, probably below 55, and then we get rejected down and then crypto's game over. Bears can take over and just short all cryptos. So on the monthly chart, you can still see this yellow horizontal bar here. So the summary is if we close below 50,000 at any point this year or next year, that's probably could be potential trouble for Bitcoin. Now, let's move on to Ethereum. Ethereum Problem, death cross. First, death cross. The 50 EMA has crossed below the 200 EMA August 13th, Tuesday. That is a warning sign that the price has closed, lower lows, lower highs over time. We're below the 200-day moving average. Death cross could signal the beginning of a downtrend. We had the golden cross back in 2023, November, when everyone was crazy long for Bitcoin and crypto. Now we have the death cross. So certain algorithms know that if we reject down from any of these EMAs, it's time to short the market. So it's possible, not time, but there is a chance that the rest of the market can crash. Let's quick rewind. Bitcoin on the daily, it's getting a little bit suspicious. We might have a death cross if the price cannot close above 60,000. It's getting close. It's starting to consolidate actually into a symmetrical triangle. Let's rewind. Total on the daily, the same thing. We're about to death cross. So that's why, even though I'm kind of bullish a little bit, it's because I'm thinking as a trade, but as an investment, if it's about to death cross, I'm not going to buy that. Now, Solana is consolidating straight sideways right now, basically. Now we bounced, we're touching the 125 support, maybe, but sometimes when you get such an obvious support level, one of these is just going to crash down. Just like what happened with Amazon over the past couple of years. So want to watch out for that. 125, 126 support. Now I'll give the two cases. If we rally up, resistance 163, big resistance 194, the most bullish case in the consolidation pattern. However, if we reject down, watch out. This could be lower low, lower high, lower low, lower high, and then a huge short sell-off in the potential future. So crypto basically has run out of catalysts in the short term. Countries and governments are basically in control of the Bitcoin trading and taxes, legislation, and laws. So that's actually not good for crypto. Crypto was supposed to be originally kind of the people's money, digital money, and free from centralization. We're supposed to be decentralized. But anyways, besides that, we have Bitcoin ETF and Ethereum ETF. It's approved, but people are just not excited. The prices are too high. Remember my long time ago, last year's video, we're talking about Solana like over here in this area when we had the golden cross, right? We're about to death cross possibly. So just 100%, I am not really interested right now in crypto because I need to see massive breakout. I need to see massive catalysts, countries, everybody legalizing trading and such, but it's not happening. So now I'm preparing for mentally, if we're going to crash, beware lower lows and lower highs in the market with death crosses that cannot sustain rallies. That might happen in crypto. Watch out for that. Okay, let's go to stocks. This is September 2nd, 2024, Monday, Labor Day holiday in the USA. Now we're going to stocks. Earnings releases upcoming. Not the major companies, but still, if you're interested, Dollar Tree, Car-Mart, Hormel Foods, ChargePoint, Hewlett-Packard Enterprises, Neo, Broadcom, and Big Lots. USA economic data releases, job openings, manufacturing PMI, non-farm employment change, unemployment claims. It's going to be a big jobs and labor data and hourly earnings week for data all over the news. Services PMI, natural gas storage, crude oil, hourly wages, unemployment rate, FOMC member speeches, and later this month we have the FOMC meeting with the potential possibly a 0.25% interest rate cut. So 25 basis point cut, interest rate, excuse me. Potentially. That's what word on the street is. Okay, so let's go to SPY. Now, SPY again, it's testing this resistance. I might have said this last week. I'll say it again. 565 is our resistance, yellow bar. We had some consolidation going sideways for about 7 to 10 days. I want to watch out for that. Now, we are not at any extreme, so I'm not expecting a huge pullback or anything like that. We are still in the uptrend on all these EMAs, moving averages. The pivot point, we held above it, so it's good. We can continue here if we have good data and good news, and just break out above 565. The longer term cup and handle play from 2 years ago is this cup, handle, and then breakout. So then what was the measured move of this? 30%. Measure the move. We're supposed to go to 600, 598. That's my target for this cup and handle if it's going to be textbook perfect, which it might not, but that's still easy target number for everyone to remember. 600 S&P 500 at some point. Just a matter of good data. We have good earnings, good data. We're probably going to get there, most likely. Now, if we draw trend lines, we're getting stuck at the resistance point. So it's the big push right now. If we don't break above resistance, then we could double top, just like crypto. We could double top and pull back, no problem, to about 535 or 506. And I would not be surprised at all if that happens. QQQ, we just barely rallied. Remember, this is like a flash crash. NVIDIA pulled back something like 6% last week on mixed earnings, but the rest of the market did not capitulate crash. However, we're holding the higher low in this longer term trend line support yellow on the bottom side, which is good for now. We like to see higher highs and higher lows in a bull market. Now, something to watch out for is if this is a lower high in the price, right at 485, want to watch out that we're not going to reject down. Yes, there's an upside down head and shoulders, but I'm interpreting this in the weekly chart that it's not a lower high inside of the channel. This could become an evening star type of psychological pullback, okay? Because higher highs, higher lows, higher highs, barely a higher low. So to make a clear uptrend, we have to go to something like 525 to 555 to really get out of this danger zone. We're just barely holding on to that. We're tapping that support level going back this year. See if we could get higher highs. If not, support level 467. And we have some gaps here, 452, 440, and 422. So I'm just getting prepared for either scenario, excuse me. Anything that happens. Now, DIA, like I said last week, remember, patience is the key for swing trading. What did I say basically last time? We were testing the resistance area. We had a big test of resistance 2 weeks ago, and then a week ago, basically, we had the next test of the resistance. And then what happens? Breakout. Now, for me, I'm a support value trader, basically, or a value investor or support trader. I don't really like buying up here long because the risk is so high. Day traders love this breakout play. Day traders love support plays. But I'm more of a swing trader, so I like margin of safety like Warren Buffett taught us in the market. So I try to buy support levels. Resistance breakout is good, but if someone's trying to long like tomorrow, then they might have to hold for many years. But we still got this. This is what I was saying last time. Day traders like this play. You bounce off support, find some level resistance, support, wherever it is, resistance, support, and then try to break out of that. Now, weekly, nice, strong candle we're showing. All-time highs. This is amazing, right? All-time highs. So next target, I have to use a pivot here. We're just probably going to touch 419 and 428. So those are my resistance on top. Support on the bottom, 403 and 394 if it goes deep down. Now, IWM, kind of this megaphone broadening wedge pattern I like to call megaphone. Resistance at 224. Another resistance, 222. Support 216, support 214, and now we're in the gap zone. By the way, TradingView has a free gaps indicator if you're signed up or you paid member. Easy, gaps, boom, right there. You see it, 2 colors. So we have these gaps. Now, watch out again on the longer term, weekly and monthly, it's not going to turn into a lower high, 220. So if we reject, if something catastrophic happens in the market for whatever reason, we'll know we're going to go bearish. We need one more evening star, bearish engulfing candle to create the evening star, and then we'll pull back down. If not, this could be a weekly hanging man candle from last week. Watch out for that, right? Again, name of the game for trading and for investing is support plays. It's scary down there, but that's the best value because it's discounted. Now, very quickly, I just want to point out because we have oil and gas this week. So oil, this is a lot. Let's just turn everything off here. Oil, remember, the Smaller support play on this bottom yellow side is starting to hold, starting to chop around, and the price turning into a symmetrical triangle. A lot of gap up and down here. So not really the cleanest charts that I'm seeing. So when it's not clear, I don't buy. I need to see something because it got rejected 3 times. It's like double bottom to a triple top. This is very choppy. I don't like seeing this. So I need to see something like a support play or some nice bounce, maybe a triple bottom. Hopefully it doesn't crash. Now natural gas is something I'm keeping an eye on for. And I'm going to show people right now because maybe this is going to turn to a nice double bottom play. I like seeing this. Very nice. Remember, I like support play. So it needs to hold. Maybe it's going to be like the April 2024 play. If it is, this could be an easy long if it's going to work. Not always, but 15% to an additional 15%. So $17 second target, $15 first target. We need to hold 1250. Definitely need to hold 1250. Hopefully it doesn't capitulate, crash on some bull trap fake out. But I like this setup. Hopefully this works for natural gas. Gold and silver looks like it's just holding. They're not at any, they're at EMA support right now. That's all I'm going to say for gold and silver. EMA support. All right, everybody. Thank you so much for watching this video. If you like this video, go ahead and click like, subscribe, leave a comment, and I'll try to check those for next time. Remember, happy trading, risk management, and I'll see you in the next video.